You have inflation eating completely into the debt market. I mean, almost all of our investors are high net worth US individual investors. Their biggest concerns are inflation. One is the debt market is closed off to them. It's not even an option. There's like, if you invest here, you're going to lose money, right? Real estate market are trading at such low cap rates, which means your end return is so low that they're like, man, after I pay property managers, asset managers, pay for expenses or whatnot, maybe I'm netting like 2% or something. And I don't know if these markets will, your buffer for error in, let's say, acquisition pricing or exit multiples or just paying real estate commissions can eat away anything. So guys are looking at the market and say, where do I place capital? Adam and I continuously write articles about alternative asset investments, largely related to what the big players are doing. I mean, you're seeing every pension fund, every life insurance company, every large asset manager player coming in and saying, one, I want climate risk controlled, especially companies that are focused on sustainability and are profitable. Two, they're going to dump a tremendous amount of money into alternative investments, especially private market deals, because they have higher yield requirements, especially pension funds, right? They're massively underfunded. They need to make up those yields, or they can't make their liability commitment, their actuarial liability commitments to all these, pensioned employees. So all these guys are moving into alternative investments. What I'd say from a macro perspective, which is obviously helping us because we only participate in the private market space, is that valuations on private companies, especially ones that can reach scale, that can be acquired by large pension funds, large institutional asset managers, or large, I think insurance companies can drive a lot of this as well. And I could see them easily getting into the private space. Those valuations are going to explode, and they're going to mirror that of public markets here in the short term. And if there's nothing that happens with central banks and there's not a significant supply of IPO entrants on the public markets, those valuations are continued to be inflated, and guys won't place capital there. They're going to want to look purely at private capital placements. And when Adam's talking about our underwriting, we don't underwrite at gigantic multiples like 100 times revenue, like the example that Adam gave. If you looked at our deck, we underwrite on things that we use all comparable transactions of what is happening, and then we take a discount on what's happening in public markets or private markets. So we know we have something that is just incredible. We just have to execute over the next 5 years.